Hi there. Thank you for tuning in. I'm Farrell Macdonald, the real estate broker here in Toronto with Royal LePage. And today I'm offering up my take on the real estate marketplace for the month of May. It continues to be a rather exciting time in real estate, lots of uncertainty and lots of unpredictability, but I'll do my best to put some of this into some kind of perspective. So we're going to talk about what happened to the prices in the month of May, which key indicators have changed and why, and what's expected to happen next. This is going to be my best guess on what we can expect to see coming down the pike, and as well as some tips for anyone who may be considering making a move at this time. So for those of you who I've not met before, not dealt with before, my background as a former accountant means I like numbers a lot. And I'd like to just dig down behind the actual statistics, not just look at what's happened, but look at some of the reasons why. So that's a little bit about my background. As well, I was the featured expert in a real estate podcast, which was lots of fun, hosted by Janine Harris of Keyring Media. Lots of generic real estate-based information there, so it's not market specific. And if you get a chance or are curious, by all means, tune into that. And just a little disclaimer, all these views are my own. They're based on information provided by the Toronto Regional Real Estate Board. And these are intended just for discussion purposes. If anyone is relying on this information or any information from a real estate board, please make sure you speak to your advisors and put that into a context that suits your particular unique circumstances. And as always, none of my efforts here are intended to solicit parties who are already under contract with another real estate brokerage. So before we jump to May, let's take a look at April, recap things that happened there. April month over month, year over year, we saw an average price change of 0.1, which is essentially nil. It was flat. Sales were down by 67%. The days on market dropped by 8%. So things are moving a little more quickly than the year before. On the right-hand side, we have April 2020 versus March 2020. So just 1 month's worth of activity. This was the first full month of activity after the emergency measures were in place. March was a sort of a blended month. We had half of it before the lockdown, half afterwards. So April was the first month of full lockdown. We saw an average price drop of 9%. The sales activity, the volume, dropped by 63%. And the days on market was up dramatically. I think there was a lot of uncertainty about what was happening, what was going to happen. So any of the transactions that were occurring were just taking longer to actually happen, to execute. So here we are in May. Year over year, we saw an average price increase of 3%, so fairly modest given what we're used to seeing here in Toronto. The sales activity was down 54%, but that's still not quite as big a drop as we saw in the month of April, year over year. And the days on market, up 26%. So again, any activity that was occurring was just taking longer to happen. May 2020 versus April 2020, we saw an average price increase of 5%. So as you may recall from April, we saw an average price drop of 9%. So we've seen some recovery there. And this is just month over month. No 1 month in isolation represents a trend, but things seem to be going in the right direction this time. Sales activity was up 55%. So given the huge drop we saw in April, we're still a little behind where we would normally be, given assuming we didn't have a global pandemic surrounding us. So the sales activity is up month over month. Days on market, again, also up. So things are moving a little more slowly in most cases, but deals are definitely happening. So this is a visual to show you where the price has been since the beginning of the year or the end of last year. We started off just below 840,000, up just a smidge in January. Big drop here in February. You can see the big spike in February. Slight drop off in March. March to April is where we saw the 9% drop. And then in May, we're up 5%. So this is just a visual to show you how the prices have been trending. We don't normally see this kind of fluctuation in a spring market, but keep in mind, month over month, there are fluctuations. So this might look a little more dramatic than it actually is. Now, the percentage of total sales by price range, this is one of the exercises I go through on a monthly basis to help put in perspective the overall sales volume. Where have the transactions been occurring in which price range of the market? So back in April, we actually saw an increase in the average to $1 million price range. There was an increase in activity there and a drop off in the below average price range. As you can see here from this chart, the higher end of the market, $1.5 million and up, tends to be fairly flat. It looks like there's not much change on a proportional basis. 1 million to 1.5 saw a little uptick in May. So we've seen a shift away from the lower price, the below average price to 1 million. There's been a slight drop off there, and it's been picked up in the 1 million to 1.5 million and the below average price range. There's been a little more activity there, probably more on the condo side. There have been a few more condo sales than I saw in the month of April. The other ratio I like to look at is the sales to new listings. This is the essence of the supply and demand factor and the whole dynamic on a month-to-month basis. So as you can see here, month of January, things were pretty much in equilibrium. Supply was fairly keeping in close pace with demand. February saw a big jump, much more demand than supply, which is not unusual for the month of February as we're heading into a spring market. March, much less so. We were heading back towards a more balanced market. That's because there was a lot of activity in the first half, less so after the emergency measure was put in place. And April saw a drop. So we've got a little less supply, much more demand chasing a little less supply. In the month of May, we definitely saw things fall closer to what we would call equilibrium or a balanced market. But there still seems to be a drag on the supply, not quite able to keep pace with the demand. So we'll see what the next couple of months reflect. This is the full-on spring market, so we're probably going to get a better snapshot in the month of June as we head towards the summer. So what might happen next? Again, this is just my best guess based on what I'm seeing out there and speaking to clients and other experts in my world. So I put together a little if-then scenario. If the government supports are successful and achieve their goals, and consumers are able to emerge from the lockdown and the pandemic measures financially secure, then the market should remain in balance. So supply will be keeping pace with demand. Prices will probably increase in a measured way, nothing too dramatic. That's what we identify as a healthy marketplace. However, if some of these efforts are not successful and consumers still emerge financially stressed, or employment doesn't pick up to levels that we're hoping or expecting, then we may see an increase in the supply of properties available for sale, or we may see a decrease in the demand, or both. If both of those factors are in play, then we can see a price drop. We may see a price drop. Too early to tell. My own thoughts are a lot of these measures, like the Canadian Emergency Relief Benefit, took us to July. The mortgage deferral program that was put in place in March was for 6 months, so that takes us to September. I don't think we're going to be able to gauge any of this and find out where people are really at until later in the year, which would be Q4 for all the financial types out there. So that would be October to December, or perhaps not even until the start of 2021. I don't think we're going to get a good read on where people are at financially, where consumer confidence is at. If people are feeling financially stressed, they're usually less likely to make discretionary purchases or undertake something as dramatic as a change of residence. So I think it's too early to tell, but we'll definitely be watching. If you or someone you care about is planning on making a move, these are similar to the suggestions I posted in April. Most of the real estate activity continues to face some restrictions. So that includes no in-person open houses. Showings require an acknowledgement by any visitors to the property that they have not tested positive, have not traveled, they haven't been exposed to somebody who was tested positive, they're not exhibiting symptoms, that kind of thing. So everyone's being extra cautious, but the activity is happening, assuming you're aware of those restrictions. Buyers still need to be cautious about appraisals, and I think they should in any marketplace, but especially right now with lenders sort of pulling back and being a little more conservative. I would not waive my financing condition or go firm on a transaction unless I've got the support of the lender around the price that I've actually offered to pay for that property. If you're a seller, I would strongly advise you provide complete and high quality information up front. This means full disclosure, providing as much detail about the property, the history, any repairs or maintenance that have been done to help market the property, and engage in a very fulsome and robust marketing plan. There is still competition out there, and you want your property to stand out and people to arrive feeling confident, keeping in mind that a lot of them may be reluctant to even go and tour properties. So we want to make it as easy as possible for them. And everyone, buyers, sellers, even tenants, need to proceed cautiously and safely, but this definitely can be done. As we've seen, there's been an uptick in the activity in May. We're expecting probably the same or hopefully better in the month of June. But it still needs to be done very cautiously and safely, keeping in mind that this pandemic is still very much a part of our daily lives right now. So I think that's all I have for now for this month. I'd like to thank you again for joining me. Questions and introductions are always welcome. You can email them to me at farrell@farrellmacdonald.com, and as well texts and phone calls are also welcome. Thank you for joining me.